Alrighty, good morning everybody. It is Thursday, February 10th, 2022. We're going to get started here with our pre-market analysis for the S&P 500 futures market. Just to quickly review the last day, it was pretty much, just a sideways chop fest all morning. So there was this slow trend up and this inch higher, and our targets for yesterday was basically an expectation for a bullish push to 45.78.75 and 45.86, which was basically right here, this red line I'm drawing. So we got our first target. We pushed right up into 78.75. Of course, they retraced pretty much the entire daily price action and then came back to eventually come up to that high. But pretty much all morning we were trading in a sideways range, so it was pretty ugly. There were some decent trades. In fact, the first trade call out of the open just a few minutes in was basically one of the better trades, pulling back right into the previous resistance. I believe we had a prediction point maybe sitting around here. We got a nice bullish divergence. We were in the midst of a potential bullish breakout here, continuing to chug higher. So that really was one of the better trades. And then as it started to sell off here and we peaked up and retested the highs and got a double top, we actually started getting a little bearish with that type of price formation. Tried to get a short off the back end of the 200, and then next thing you know, we were right back to new highs for the day. So it was kind of a mess. Still plenty of scalps and trading opportunities, but the whole week has basically been a little bit of a mess from a trader's perspective. So let's go ahead and jump into this morning. As you can see, we had the CPI come out at 5:30 this morning, 5:30 Pacific. And well, it wasn't that high there. It was right around here. So we were chopping around in the overnight range, and then the news came out. We came up, and it's kind of cool. Came up right to the eye level, just a minute into the news, and then failed. And this was a pretty violent sell-off. I was kind of getting my charts together and my coffee going, and noticed this really aggressive sell-off. So this is what we find ourselves in this morning. News came out and got a violent sell-off from there. That doesn't mean we're going to continue to go. This could be kind of a fake out to get all the bears in to potentially pop it back up. You never know. So let's go ahead and take a look at our high time frames and dial down like we always do. I'm going to skip through the high time frames really quickly, but essentially we talked about the yearly holding 50% of the last year. We talked about the 3 months showing some signs of exhaustion in the current push and still basically holding right around 50% of this 3 month candle. So we still have not really broken out to break above 50% of the current candle and basically still stuck around 50% of the previous 3 month candle. So still trying to work things out there. Our monthly, very, very bearish, huge bearish engulfing bar. And we're still playing right around 50% of that bar as well. So we're kind of in an interesting part of the chart here. And then on our weekly, we said we got our first clue for the bulls. So this was literally at the beginning of last week. We had the bullish clue on the weekly, and so far they're attempting to break out. And you guys all have heard this a million times. We tried to push. We couldn't get through our first expected resistance area around 45.70 to 45.80, and sure enough, remember they came up to 45.86 and then failed. So a nice little peek into that swing low there, and now we're having that trouble. Let's go down to our daily. Yesterday we came into the market, and this is what we saw: a nice bullish divergence on the retrace of this bounce out of the 38% retracement of the whole push up from, what was it, 3 weeks ago, the low back then, all the way up to the high in and that, again, expected resistance zone right there. So we came down, held, and then on the retrace, after we bounced out from the 38% of that leg, came down, we got maybe 75% of the leg and got a nice daily bullish divergence there. So as we came into the market yesterday, I think we were playing around right around the highs of the day before. And so we had a bullish clue, and sure enough, look at what happened. Yesterday we got the push to 1 point in front of the swing high there at 86. So our high yesterday was 85. And as you can see, there was an attempt to come up and break through that expected resistance zone. And what we were saying going into yesterday, like I said, was an expectation to come up, tag 78.75 and potentially break through. And then, of course, the swing high at 86 was going to be that dividing line. So we came up 1 point in front of it and then failed, and that's where we find ourselves now. So a huge rejection from that major resistance zone there. Not really a good omen for the bulls here. In fact, when we see the market come up and make a peak like that, pull back, and then start to retrace and fail from there, not really a great pattern in my opinion for the bulls. So that's what the daily is showing me this morning. A really nice bullish divergence as of yesterday morning that we could use, but there's no follow through. We got all the way to that resistance zone, which is shaded there. I don't know if you guys can see it on your screen. That's what we were looking at, and it failed. So coming into this morning, I don't really have anything from a divergence perspective over off this high. We did technically push down a point compared to that major swing high, and the RVI did push down as well, although I think it's a little bit more exaggerated, so there might technically be some argument there, but I'm not going to reach too much. So that's what we're looking at on our daily. Again, the potential to hold the 38 retrace and go ahead and push. Again, we were saying maybe all the way to the 27 if we could get through this area and through that swing low, and they failed. So keep that in mind, kind of at the front of your mind this morning, that is not a great clue for anyone who's trying to buy the market right now. So let's go down to our 4-hour. We have our zones that we've established for a few weeks now. We've been talking about this, and sure enough, you can see nice rejection at the top end of this box here. Comes down, holds the bottom end of this box, comes back up, and right off the back end of the box, we're now rejecting, right? I've already mentioned it 2 or 3 times. So this morning, pulling back, I want you to keep in mind what we are actually pulling back into from a price structure perspective. We've got this whole box right here that basically outlined the chop fest that we had for 2 or 3 days there. And remember, the high was 1450. So I believe on Monday when we were here, we were sitting here talking about if the bulls could get through the highs of the last week, which was 1450 there, then we could expect some type of breakout to come back up and test these highs. So I think you guys, if you were here, would have remembered hearing that, and here we are, and we got the rejection. So this morning, this will be important. We're actually pulling back. Let's go to the short time frame, right into 45.12 right now. So we're breaking through that major swing high at 1450. And then there's one other thing we want to look at as far as this goes. There's a leg here from the low to the high, and that's also the 50% retrace right now. So we're right at a critical level, and there's one thing that's sticking out to me. It'll probably look a little bit better on the higher time frames, or the shorter time frames. But if you look at the 61.8 retrace of this whole leg, basically the last week of price action, the 61.8 is lining up right here with that major swing high wick. Let's zoom in a little bit here. This guy right down here is pretty much exactly the 61.8 coming across. So the high there is 44.9650, and if we look at the retracement of this, where were we looking, of this leg here, it's about 94. So pretty much 94 to 93 there is a level that I would not be surprised to see some type of bounce off of. Now, there's no guarantee that there's going to be a gigantic bounce or anything like that, but that would make sense to me if we can't hold the 50% retrace and the highs from those few days ago. Let's go down, and one last thing to say from the 4-hour perspective is we did get a nice clear bearish divergence off that high. Remember, the daily was a little bit a stretch because it technically did push lower, and so did RVI, although there's a discrepancy in the range there. The 4 hours nice and clear, very clear bearish divergence up top, and again the pullback now, and on the pullback don't necessarily see any sign. Well, I take that back. If price was to hold from where we are right now, we would technically have a flat RVI level here, but price would be obviously much lower. So if this held and it looked exactly the same when this 4-hour bar closes and the next 4-hour bar opens, and this RVI starts to peak up like that, we'd have a nice double bottom on the RVI, but a lower low on price, right at a critical level in the market. That could be where we get the attempt to come back and maybe break through. Remember, just because we failed there, and that is somewhat of a bearish pattern, coming up and trying to peak above and failing, they could pull back. Anything's possible. Make a nice 50, 61.8 retrace, and then attempt to come back up and make new highs. That's one possibility. Remember, there are a million different possibilities. This is one thing I'll be watching. Does this end up closing with a double bottom on the RVI? If it does, and the next candle starts to hold and actually create that turn, then I will start to really heed that signal on the 4-hour. So just keep in mind where we are right now is a great level to bounce from. We also have the 61.8 down to just about 44.9650. That also looks really nice. If that doesn't hold, anything's possible. They could bounce a little bit lower, but once that doesn't hold, for me, it's opening up a retest right back into this zone that we expected to be support a few days ago, right into the previous maybe 2 weeks ago highs, that 44.46 quarter or 46.75. So if they get through 96, probably going to come back down to the bottom end there and test that area. And then the cool thing about, well, I don't know if it's cool, but the thing about the market is for the last week or two, there's really not much to add to the picture. All the levels that we've identified here are still valid. So if we pull back, we're still pulling back into the same levels that we haven't tested yet. So if you go back to any morning of this week and go to my pre-market, we basically already covered all this. We've got the 50% retrace down around this 4,400 area. We emphasize this area down here around 43.55 to 43.60 as being a great level. In fact, I think on Monday, I said if we ended up breaking the low here from that 44.46 high and started coming lower and couldn't hold from there, if we came down right into here, we'd have a confluence not only of retracements, price action, a whole bunch of other things. We'd also have this beautiful hold of the trend line. So that was a beautiful trade setup, but we never pulled back. On the flip side now, the 50% level that is still a very valid area for a hold is now lining up with that trend line. So in the next few hours here, remember this is a 4-hour chart, so within the next, let's say, I don't know, 18 hours, if we continue to pull back, we could potentially get this beautiful lineup right here. So just be aware that that's kind of there, at least for the next few hours. Once we start to advance a little bit further, maybe into tomorrow or midday tomorrow, we'll no longer have that nice alignment. So I am watching that stuff. It's nothing new. Monday's pre-market was all the same levels because we haven't broken out from that high of the expected resistance zone, and we haven't broken below our expected support zone yet. So we're still in the same scenario. If we push up and we do get some support, regardless of where it is in the market here, and we do bounce and get through our first expected resistance zone, remember we have this swing low right around 46.06. Let me get the number. Yeah, right around that 46.06 level. And then if they can get through there, it's opening up the push to that next chop zone up here around 46.60, give or take. And remember, there's a lot of supply here, a lot of attempts to push through the previous support chop area right there. Could not get through multiple times, and this is again a 4-hour chart. So we're looking at a few days of trying to push through and a lot of failures and eventually a major sell-off. So coming back up into there, not only is it an expected resistance zone from a structure perspective, but it's also a little bit, I would argue, a supply zone right there. So pushing up into there, if I was long in that push, I'd be taking profit there just in case we got some type of violent sell-off. Any further than that, I guess we'll worry about it. Remember, we do have a bearish case from this high right now. So, if it does end up, if the bulls end up surprising us and jumping in for the push, We'll worry about levels further than that if we get up there. Generally, we have what, 47.40, and then the high is all the way at 48.08. So those two levels, and then down into this level I just emphasized. On the flip side, again, if it sells off and goes through everything that I just mentioned below us, I mean, your guess is as good as mine. Are we going to continue to correct here and sell off even more? You can see that the extension from the all-time high to the major low we made down at that 42.12, 42.1275, if I recall correctly, the 27 extension brings us to 40.50, which, I'm just looking from a price action. There's actually a pretty good resistance right there for multiple days, right around 40.50. So not a surprising area to go ahead and sell off into if they do get through all the stuff I mentioned up top here. So there's kind of the larger picture. Now what we can do is dive down and start looking at specific individual levels in here that are going to be important this morning. So let's take a look. Here's our 60-minute chart. I've got all the major eye levels on there. Again, these are delineating all the major areas of structure in the market. All you have to do is go back and look and see how they highlight the major areas of consolidation, or what some would consider balance areas in the market. And so as we pull back here, we're going to be coming into, well, first of all, that 45.27 and 45.14 swing high. That little area right there was an expected support zone. And we are right at the kind of the bottom end of it right now. Remember, we said we just bounced around 45.12. So a good little probe right into that expected support area. If they get through that, we're now down into 96.75 again, 44.74.50, and then if that breaks, back down into 45.50, which was that previous weekly resistance zone that we were watching for quite a while and acted as really strong support just a few days ago there. So coming into there could still find some resistance. Any deeper than that, again, we're pulling back into all the same crap that I've been talking about for how many days now? 1, 2, 3, 4, 5. Basically for 6 days straight, we've had the same levels below us, the same levels above us. So I don't know if it really makes sense to belabor this at this point. We've got these major levels as targets to the downside. They are potential support levels. And again, 60-minute also pretty strong bearish signals from that push to 85 from yesterday. So a pretty good confluence of bearish signals up there. Is that going to lead to a larger pullback? Again, nobody knows. I would argue there's a good confluence of signals telling us it should pull back, but you never know if the bulls are going to go ahead and jump in. So we're going to have to see what the market does this morning, and we can zoom in on the shorter time frames here into this pullback and see if there are any nice bullish arguments from a divergence perspective. And right now, I told you the 4-hour could potentially show that if it ends up closing it and everything, and it creates a double bottom here on the RVI. The 4-hour will actually have a bullish divergence. The problem with the higher time frame is it takes a long time to actually close, and by the time it does all that, you might be a little bit late to whatever the move happens to be. But I do want to keep that in mind. When we get to the 60, I don't really think there's a sexy divergence there. So not necessarily a huge confluence with those two time frames, but let's look at the 30 and the 10. So the 30 here, again, from the previous swing low on RVI over here and price, we pushed lower and the RVI is pushing lower. So don't think we have a nice confluence there either. And then our 10, again, this is one of those extrapolations. You could extrapolate all the way out, but in the local area, still not really a convincing bullish divergence either. So what is that telling me? It's giving me a little bit of a clue that that's probably not the low, the major low where we're going to get a total reversal for a push back up to test these highs right now. Now that could mean that they come back and test this and get a double bottom and then we get the signal, or that could mean we really continue selling off until we get that confluence of bullish signals on the 4-hour, the hourly, and the 30-minute at least, and maybe that's where we'll actually get the turn. Remember, anything's possible here. I'm just telling you what the signals are saying, and sometimes the signals are wrong. Sometimes they're spot on, and they end up keeping you out of the market when you expect there to be a bounce, and then it gives you that clue when we start to find the real bottom, that that's really the real bottom. And right now, the signals aren't saying that. So we'll see what happens. I don't think there's anything else to add from these intermediate time frames here. We are, again, holding the prediction points pretty much to the tick right now. So that's a good thing there for a bullish argument. But just take a look at everything going on here. What else can I say? I think that's basically it. I gave you guys all the relevant levels that you're going to want to pay attention to here. And I think we're going to jump down to the member section on our short time frames here and see if we can't find some trades coming into the open. Again, for a final kind of summary, we have a pretty good bearish argument from this high. Remember, it was a push to kind of break through that expected resistance level, and they failed again, and even came up in the overnight session and tried to push and failed once again. So that's not a great clue for the bulls. Just keep in mind anything's possible, and we've got our levels and signals to hang our hats on if this sells off or if it starts to rip higher. So hope you guys have a great trading morning, and we will see you back on Monday, where we go ahead and check out what the higher time frames are saying up on that quarterly, monthly, and weekly chart. So have a great trading day, have a great Friday, and a great weekend, and I will see you guys on Monday.